So you're gonna live on a desert island and you can only take one analysis technique with you. What should it be? I asked my followers on X that exact question, and the answer from the professional traders out there was overwhelmingly support and resistance. But this isn't any old support and resistance video. Not only will I develop your core understanding of what support and resistance is and why it matters, I'll explain how to practically use them on the WeTrade app, including horizontal lines, trend lines, and channels. Hi guys, I'm Jasper, market analyst for WeTrade and founder of Trading Writers, and I'm here to help improve your trading education. It's important to understand both the opportunities and risks involved. Online trading can be rewarding, but it also carries significant risks, including the potential loss of your invested capital. Make sure to educate yourself and consider your risk tolerance before getting started. Luckily, my opening question makes no sense. You shouldn't choose one tool from technical analysis. A strategy is made up of multiple elements, and I'm guessing a deserted island wouldn't even have Wi-Fi.
Wilson, where are you?
But I think you got the point I was making. Understanding support and resistance is crucial to trading. If you think you perfectly understand the concept of support and resistance, you can skip to the last section. But in this trader's humble opinion, it never hurts to revisit important ideas. So I'll start with how support and resistance, trend lines, and channels work, then finish off with how to trade them. So without further ado, what is support and resistance? You can check the already handy WeTrade video, which I've linked to in the description, but I'll give you a quick reminder anyway. Very simply, it is a price level that has previously interrupted the movement in price. You as a trader can use this information to time trade entries and exits, and I'll explain how in just a minute. First, let's visualize it. Resistance is a horizontal level that previously caused a rising price to turn lower. Support is a horizontal level that previously caused a falling price to turn higher. Therefore, resistance is always above the current market price and support is always below the current market price. Next, let's have a look at the trading platform. When you're drawing support and resistance levels, you can use a horizontal line drawing tool or simply position the crosshairs at said levels. Now you're asking yourself, where do I place the lines? The answer is you have to look left. Support levels are drawn at previous lows, resistance is drawn at previous highs. Keep this in mind though, nothing is perfect in technical analysis. Support and resistance levels are normally more like zones rather than just one price, so don't get too fussy about 1 or 2 pips. When a price enters support or resistance area, we say it's testing it. There are 2 possible results to this test. 1, the support and resistance level holds and the price will reverse in the other direction. Or 2, the level will break and price will continue in the same direction. This sets up 2 main ways a trader can use the support or resistance level. The trader can trade the reversal or the breakout. Let's say there's a support level. You can buy at the support level if the price holds, or you can sell below the support level if the support breaks down. Remember this little gem about support and resistance? A broken support will often become resistance, and a broken resistance will often become support. You can see that in charts all the time. Do you see how after breaking the resistance here, when price was pulling back later, it eventually found support at the old resistance? And likewise, do you see how after breaking below support here, the price later found resistance on a rebound at the former support? Sadly, it's not enough to only use support and resistance to trade, but you'd be surprised how little extra you really need in terms of analysis to be a successful trader, because these concepts are so powerful. Trend lines are basically support and resistance, but drawn diagonally, not horizontally. Now, that is only possible when the price is moving in a trend. By the way, people overcomplicate trends. A trend is simply price moving up, either up or down over a sustained period rather than just sideways. And check out my previous video on identifying the trend. And just like support and resistance, you can trade reversals or breakouts from the trend line. When drawing an uptrend line, you connect to the previous low points within the uptrend, and when drawing a downtrend, you connect the previous highs. You only need 2 previous high or low points to draw the trend line, but you need a third point to confirm the trend line is actually valid. Once you've drawn your trend line, you can use it as a guide for potential entries. In an uptrend, traders often look to buy when the price pulls back to the trend line, expecting it to act as support. In a downtrend, traders look to sell when the price retraces to the trend line, expecting it to act as resistance. Then if the trend line breaks, you can look to trade against the trend. Another good rule of thumb is that the steeper the trend line, the less reliable it will be. That's just because it will take a very small correction to break the trend line if it's steeper, and a small correction is not normally enough to inform you as to whether a trend has really reversed. Trend lines are more subjective than horizontal support and resistance, and different people will connect different points to make different lines. Some traders will actually connect closing prices instead of highs and lows, and that's actually fine. The main thing to achieve with your trend line is to visually represent the speed of the trend. If you're getting some value from this video, please just tap that little thumbs up icon down there. It really helps spread the word on these videos so we can make more of them. A channel is basically a double trend line. You draw another trend line parallel to your first one, i.e. at the same angle as the uptrend or downtrend that you've been trying to analyze. So for example, if your uptrend line were drawn along a series of higher lows, you're drawing your second trend line along the highs at the same angle. Likewise, if your downtrend line is along a series of lower highs, the second line, to turn it into a channel, would be along the matching lows. There are three types of channels: the ascending channel for uptrends, the descending channel for downtrends, and the horizontal channel for when price is going sideways. Why would you even want to do that, you ask? Well, when a channel works as it should, it can show you both the upper and lower limits of the trend, giving you nice clean entry and exit points. Let's imagine I am on a major channel hot streak. I can use the original trend line for my entries and the extra channel line for my exits. Then if the price drops back to the trend line again, I buy in again, and so on and so forth until the channel breaks. So I just place my trades at the support and resistance levels, and it's one-way trip to Easy Street. Not so quickly there, my friend. Here's the big thing you need to understand. Not just about support and resistance, but all technical analysis, in fact. Nothing always works. Understanding core concepts like support and resistance just puts the odds in your favor when you trade. Specifically on support and resistance, I want to give you a trick of the trade that should reduce the number of bad trades near support and resistance. Remember, we can trade the reversal or the breakout. So let's start with the reversal. When price comes down to the support line, we can place our buy order at the line, or we can wait. We are waiting for price to show us we are right by bouncing a bit off our support. Our buy is higher up now, so we are not buying at such a bargain level, but the very helpful thing is that we now know where to put our stop loss right under the support created by the low that was just formed when the price bounced. The logic there is that if the price moves back under the support, it has broken and we no longer want to be buyers at this particular support level. Okay, so what about the breakout? Well, there is what is known as the false breakout or fake out. Price will break through a support or resistance, but then it just reverses and goes back through it again. The breakout was fake. So say we're trading the breakout above resistance, what we can do is wait for the price to stay above the resistance for a while. Then once it has shown us the breakout is for real, we place the order to buy and put our stop under the old resistance, which should now act as support. And that's really all you need to know to get started. The rest is practice, which you can do for free in your WeTrade demo account until you're ready to try it live. If you got this far, then please smash that like button and subscribe to see more videos like these as soon as they're released. Thanks very much for watching and happy trading.